Hello, my name is Triffany Hammond, and I'm founder at triffx.com. I'm here today to help you understand support and resistance by starting with a longer time frame and drilling down or narrowing it down to the time frame that you like to trade. What I like to do is start with the daily chart, move down to the 4-hour chart, and then down to the 1-hour chart, which is my most often entered time frame. But what I'm talking about here today, you could do starting with any time frame that you like. So if you like the 5-minute chart, you might consider your longer time frames to be the 15-minute and then the 30-minute time frame. The whole idea behind doing this is so that we can stop getting lost in the candlesticks in the time frame that we trade, those tiny little elements that kind of show all of the volatility in the marketplace, all of that wrapping up in confusion and excitement and fear and everything, and broaden it out to sort of smooth out that data, and you can get a better feel for overall trends and the longer term sentiment. It's putting price in a larger context, and that's what we're going to do today. So for me, let's talk about the euro dollar. We're at significant lows, and we have been for a while, right? The euro dollar's been flirting with these lows for quite a long time. Actually broke below them earlier today, but couldn't hold on, and has actually bounced up off of these levels for a third time now. Well, depending on where you count your candles, this would be the 7th time, I suppose. But we can clearly see bouncing behavior in these candlesticks here, these candlesticks here, and now we're seeing it in the long shadow that's being formed here. What we're seeing here on the daily chart is that we're at highly psychological levels. What's significant to me is that it stayed below that 1.25 for so long, and actually even below the 1.24. It just doesn't seem really comfortable climbing any higher than that. That's fairly significant because what we often see when we hit psychological levels like the 1.22 is a bounce up, right? This particular pair has had screaming sell-off. It has tried recovery once in here and sold off yet again. And now there's just a large area of indecision in here that the market's trying desperately to figure out what it wants to do at these levels. I know on my blog this morning, I posted kind of some of the things I was watching. And one of the questions that came up is, are you bearish? Everything. And even though there was evidence of a slight bounce up off of these levels, I really don't have any interest right now from a fundamental standpoint of selling dollars or selling the yen. So what that means for me in terms of what I'm going to be looking at today is I'm going to be looking for where's my next sell opportunity. So what we see here is off of this pullback, as I drill down to my time frame that I like to trade, which is the 1-hour chart primarily, I'm going to be looking for those opportunities, and we'll talk about that here in just a minute. Before we leave this daily chart, though, I do want to point out that even though we've hit these low levels so many times, let me go ahead and put a line down here, the pair has not been able to make even up to the secondary highs of this larger consolidation area in here. You hear me talk about how pairs will wind up, and then break out. And this has been unable to even come up and hit secondary highs in here. That's significant because as we're getting bounces off of the same levels of support, we're getting lower highs. Now, if you understand chart patterns, longer term chart patterns, on a daily chart, a descending triangle like this is really significant as a continuation pattern. So even if I didn't know anything fundamentally, which is the reason why I'm still very bullish the dollar and bullish the yen, the technicals do stand up as well, saying that the bias still is overall bearish, even though the market's sort of in this breathing space that it's created for itself in this smaller consolidation area in the context of the larger swing. So again, I'm just not interested in going against that larger sentiment. Now, could this be wrong, and could it break above this trend line and actually even retest the highs of this larger box? Yes, that could happen and give us somewhat of a possible double bottom type feel, right? Again, I'm not going to trust any of that until I get a close above the neckline of that double bottom. So even if I miss out on some buying opportunity here, that's okay with me because I need to be comfortable with with the trades I'm taking. And if I entered this doubtful that I had the market on my side, I would be doubtful before I even got into the trade. So how do you think I'm going to manage it? I'm not going to manage it very well. So that's why I'm just looking for my next opportunity to short. So that's what we're looking at in terms of the daily chart. Let's take a look at the 4-hour chart. And all I'm doing is going one time frame lower, putting it into a closer context to the time frame that I like to trade, right? And getting a better feel for what's going on in the marketplace on this time frame. Very similar to the daily time frame, we can see that we've had this nudging along this support line right down here at the bottom. We actually even got a 4-hour close below that 1.2160 mark. That's significant. A 4-hour close is pretty telling. So with that in mind, and seeing that it has come back up and retested sort of the middle range of this smaller consolidation area, I'm going to be watching for a bounce southward, and I'm going to probably wait for a close below this little muddy area in the middle. Actually, it's not really a muddy area. It's just a tightening up of the overall price action, right? As the market became unsure of itself, right in here we saw lots of indecision. Tiny bodies, long wicks and shadows. That's just indecision. It showed a lot of decision here. Market wants to pull back and make all of that selling really affordable for the rest of the marketplace. Make sure the rest of the marketplace is on board with the selling, and then look for a bounce off of these levels. And that's going to be my entry to be in. Now, if I had actually been awake for this closing of the candle, I would already have my first teeny tiny position on, right? Because why is it a small position? Why bother getting in at all? Why not wait for the retest? Well, because it may not retest, right? Especially on something that has such a visceral reaction as the euro dollar. This baby starts to sell, and boy, everybody's on board because it's just been such a cash cow the last couple months. So, we really want to make sure that if we're going to take these early entries, we prepare ourselves psychologically and monetarily, right, for this kind of pullback, because things don't always retest. When they do, that gives us a whole nother shot at the trade. And again, I talk about this a lot in my webinars, but this really depends on your risk profile. If you can take a trade like this and hold on to that kind of drawdown and wait for the opportunity to start stacking in on a bounce step back down southward, then that's great. However, the person who takes these breakouts like this will be taking more fake outs as well, meaning they may have more losses in terms of, what's in their trade journal and the number of trades that they've taken, right? The person who, however, who sees this and actually waits for the bounce and always takes the bounce only may miss out on more winners. So it's really going to depend on your risk profile, your comfort zone, what you like to trade. And this is where that whole back testing issue comes in. If you're not sure what your preferences are, a really great place to start is in your back testing. Just to start. Now, back testing is not an end-all be-all to your education. I will never ever say you can back test and then go live. I'm just saying it's a critical foundation piece to system development and understanding what it is that drives your trading decisions. Understanding what the probability difference is between taking a break versus waiting for the retracement and taking a bounce, right? Understanding, what your preferences are. However, as I mentioned at the beginning of this, and a couple other people have filtered in since then, Ethics Street and I will be doing a back testing webinar to kind of get you acquainted with how to use some software called Forex Tester. So that's something to consider down the line. All right, so now that we can see this on the 4-hour and we see this long wick developing up here, lots of indecision, right? Market doesn't like those highs. I'm going to go to the 1-hour and see what my trigger is going to be here. Now, clearly I'm going to be waiting for a close below this 1.2260 area, right? And isn't it going to be better for me if it closes below even the midpoint of this body right here? That's going to be the trigger, the feedback candles that are going to show me this is ready for a bounce off of these levels as opposed to just another consolidation. Now, if I get a few extra candles in here before I actually get a close, either below the midpoint of this candle or below the body of the candle, all that really does is create a new area of indecision for me. So I wish I had my drawing tools. So if this, kind of blips downward and blips upward, kind of around this area, like it did right here, right? Around this line that I have in here, that just becomes my new box. That becomes my new area of indecision, and I wait for a close below that area. If I don't get an absolute reversal pattern in my feedback candles, then a close below that's still going to confirm a bounce for me. You have to remember that candlesticks just behave differently in Forex simply because the volume is so different. Equities candlesticks can be a really great way to take advantage of the story being told in engulfing patterns and all of the things that we see there. But what we do get in Forex so much more often than the actual strict candlestick pattern, especially as we go shorter and shorter in time frame, is simply a new area of indecision. And Donnie brings up a good point. They're also just inside candles. So when you get a really large body, an uncharacteristically large candlestick, the candles that form inside of that consolidation area inside of that, just called inside candles. But the point is you're more likely to get that than you are a strict pattern in your candlestick. So it's super important to understand the story being told in price action in and of itself. And that's why I wanted to just clarify that, if I don't get a great pattern here and I merely get a new area of indecision, I'm fine with that too. I'll enter my first position on the bounce there. Okay. I did get a couple of questions in here. It's a small head and shoulders. I think I was on the 4-hour chart and we were seeing that. I don't know, Donnie, if you're talking about this as a shoulder, this as a head, this as a shoulder. It's not, simply because we've entered into this triangulation from a sideways movement. Okay, so that is what you were looking at. Yeah, you need to remember with your reversal patterns, and this is really important. I'm actually glad that you brought it up. We need to remember with our reversal patterns that we really do need directional movement as we come into those in order to treat them as reversal patterns. So here on the left-hand side, you can see we're in a definitive downtrend before we got down to this little shoulder, this little head, this little shoulder. And this is an upside down head and shoulders, right? And that showed a short-term reversal. Remember, in equities, you measure the head. In Forex, that's just way too aggressive. You really want to stick with the most recent price action, which is usually the smallest shoulder, and go for 100% of that move. And that had already played out on this rise upward and then has come back down. After that, this is all just consolidating movement going sideways, and those kinds of patterns lose their meaning. We do still have, and I understand what you're getting at, Donnie, I do, because the sentiment is still there, right? Where the price is willing to go up a little bit higher, up to this level here. Let's go ahead and put a line there. And then it bumped above here with a very severe reversal, right? It wasn't comfortable nudging up above here. And then when it tried again for this second bump against 1.2375 or so, it couldn't even break that secondary high in here. Or I guess now it's a tertiary high, isn't it? So the sentiment is somewhat similar, but we can no longer treat them as strict patterns in terms of how we trade them. So understand the sentiment for sure. Yeah. But the treatment of the trade becomes slightly different, at least for me. Now, if we were actually looking at this as Donnie's seeing it with this as a shoulder, this as a head, this as a skewed shoulder, and head shoulders can be skewed, there's nothing wrong with that, then certainly this is actually already played out because 100% of this consolidation move has already happened. Right? So that's over and done with. Okay. Great. Any more questions? Dottie, did that help? Did that clear up anything for you there? No more questions on the euro dollar. Okay. Pipper wants to look at the cable. Let's take a look at the cable then. That sounds awesome. I do need to unshare the screen because if I just hop over to my next chart, you'll only see bits and pieces. And reshare the screen. And we have a whole heck of a lot of levels. Now, I had a chance to clean up my euro dollar before we started, but this one already has levels on it. And some of these I may end up putting back on, but I'm going to go ahead and take off the ones that litter up what we're going to talk about next here. So the pound is seeing some relief in here, as we can clearly see, right? Not a whole heck of a lot different than the euro, other than the fact that this hasn't had such a steady screaming downward edge to it, right? A little bit of different sentiment toward the UK economy as opposed to the Eurozone economy. And we're seeing that in here with some more even swings. Now, it did try to make a recovery back here and bump down lower one more time. And really put us in a larger area of indecision in here. I just want to reiterate, I'm not interested in selling the dollar right now. So I'm going to let a trade like this go by. I'm completely fine with that. Here's what I think it's going to do, and here's what I'm going to be watching for. After screaming moves like this, and the market really wanted to recover, and then we saw this big close. Now, this is long term, right? We're looking at a daily chart. So a close this significant below the 1.4785 area is really significant. Not only did it close below there, but it didn't come back and retouch it. We didn't get a retest of this level. So that does become significant once the market's ready to kind of give a pullback and give a rest. That becomes the area that we look for as our next profit target. If I were interested in selling the dollar, this 1.4785 would make a great profit target. Let's see where that lines up with a 200% move of the consolidation area that the pair chose down here near the bottom. So what we have here is our 200% extension. Now, there's nothing fancy here about what I'm doing at the fibs. All I do is, this is just a nice, easy, cheater way for me to measure 100% of this move. This is the same thing as taking that high minus that low, finding the range, and then adding it to this high to find out what that range is. Because what typically happens when the market sort of picks a range it's willing to move within, once it breaks out of that range, it's willing to go at least that much again. So this is just picking up 100% of this move, right, of this range to the long side. I still feel that even against the pound, I'm going against overall market momentum. So I'm going to let this pullback happen. And up against these levels, I'm going to start watching for irregular consolidations. I'm going to watch for reversal candlesticks on a 4-hour chart, something that's going to signal to me that this pullback is over. And we can go to the 4-hour chart now and we can look at that. So already up against this 200%, as we're nearing this 200% level, just past the 161.8, we can see some fear in here to the long side. So a reversal pattern on this, I'm willing to take. What's more likely to happen, though, is this reversal pattern is probably only going to come down to about this 138.2, and then we might get a second hit of this level, or even slightly higher at 1.4750. And then a bounce there will indicate a second trade. The other thing you could watch for and wait for would be, if you like diagonal support and resistance. Even when I use diagonal support and resistance, I still couple it with a horizontal level as well. So, if this were to come back up here and goof around, which it's likely to do, the majors, when they move outside their consolidation range, will hit this 200 and consolidate between the 200 and the 161.8. The crosses, particularly with yen, will actually consolidate above that 200% normally. The exception being the dollar loonie, which likes to just tap that 200 and then come just screaming in the opposite direction. So what I'm doing, even in just having that conversation and understanding the behavior of the pair, is I'm giving myself a potential setup, an if this, then that scenario. So if I do get that pullback to 138.2 and a move back up to that 200% level, if I take a trade on that bounce up against this level in here, I'm mentally preparing myself for the possibility, the probability that this is going to move sideways for a while, right? And then a new trade will be triggered on a close below that area of indecision, which may coincide with this trend line. Now, if instead we get an absolute reversal here and it comes back to these levels, I'm going to be watching for that same behavior as it consolidates against this area in here that where it consolidated before, right? And then a close below that trend line and this horizontal level is going to trigger a trade for me as well. I should say an additional position, right? That's a lot. So let me, before I move down to the 1 hour chart, I see some questions rolling in. I want to make sure I'm not missing anyone. Will the cable retrace to the 50 or the 68? Oh yeah, I think that's entirely possible. Absolutely. I think that's entirely possible. You know, of course the question is always when will it retrace and what's the best place to get in? You know, I talked about the scenarios that I'm watching for and the ones that I like. But certainly, you know, it always depends on each individual trader. Fuji says, does it seem like it's in the top of a trend channel? Oh yeah, I can see what you're seeing. Yeah. I don't love it as a trend simply because on our longer term chart, it's merely wedging right now. But certainly, you know, a third or a fourth higher high, higher low, then I'd go, okay, we have a new trend. But yeah, I definitely see what you're talking about. Absolutely. I mean, because we do. We have, you know, here's our first low. We have a higher low here. Here's our first high. We have a higher high here. And we have potentially, well, already, we just don't know if it's over or done with or not, a higher high here, right? So, yeah, I definitely see what you're seeing, Fuji. Good eye. And if you're long the pound dollar, you know, there's nothing wrong with the trade. The signal is absolutely solid. It broke outside of this resistance level, came back in, retested this middle line in here, broke out again. It's a strong signal. Just because I don't feel comfortable taking it doesn't mean you took a bad trade. And now we've talked about potentially where it could go, right? This old supply and demand zone that just did not get retested once it left. On the 1 hour chart, I've already got some reversal candles going on here. But you can see here that this is the level, just like we talked about on that daily and the 4 hour chart. It left this area, this 138.2 with such enthusiasm. It actually has not come back and retested it. So even if this is headed up to that 200% extension level, it seems likely that this could pop down just a little bit before rising back up. And the second rise, it may not get all the way up there, but a double top on a 1 hour chart, I'll take. And in line with what Fuji's commenting on a 1 hour chart, that actually ends up being a counter trend trade, doesn't it? Remember what I said earlier about using your patterns on a trend side. Your reversal patterns need to come after a definitive trend, right? With higher highs and higher lows, they're amplified on the shorter time frame. A double top in here is going to be pretty significant. Okay. Any questions? Wow. Okay. No questions. I did see a different pair. Let me find it. Oh, the Kiwi yen. You know, every time somebody brings up the Kiwi yen, I think I need to put that back on my list. I like the Kiwi yen. It's a good pair. Let me pull up a chart. I have to unshare again, remember? And let me see if I could find my Kiwi yen. Apply my template and share the chart. All right. Oh, let's see. Oh, Amy asked a good question. Why do you think the pound will crash? Won't people think, oh, maybe the UK isn't that bad now? I think with a lot of the political unrest having kind of settled for the UK, and the UK is actually posting not so bad numbers, not fantastic economically, but certainly not as bad as the Eurozone. There's, more reason now to buy the pound than ever. However, I didn't say I didn't want to buy the pound. I said I didn't want to sell the dollar or the yen. So let's talk about that for just a second, because I think that's an important distinction to make. I'm really glad you brought that up. The reason I'm not interested in selling the yen or the US dollar is because from a risk standpoint, those are the two that will strengthen in the most in risky conditions. And we are in risky conditions right now. Even, on a small scale, we've got NFP Friday coming up this week for the U.S. We've got a short trading week anyway, which leads to, even for some residual low volume, high volatility trading conditions. And we have, just globally some economic news that's hampering market confidence, right? Now, Canada did raise its interest rates, and that's actually, I think, gone a long way to infusing some confidence into the market short term being this morning, right? What we saw today, or I suppose this afternoon for those of you overseas. However, Australia said no more rate hikes for them. And so even on a small scale, we just have lots of reason right now to be looking at things being very risky. On a global scale, on a large scale, though, we have even more reason to be watching for risk. Spain's debt's been downgraded. They're talking about downgrading France's debt. I think there's still a whole can of worms coming out of Italy soon that just hasn't gotten market attention, but I'm sure it's on its way. An oil spill that is still spewing millions of barrels of gas into the ocean. We've got attacks on the Palestinian aid ship, and so acts of terrorism. We have things globally and in a huge, on a macro level to show that we are just not in a place where the market's going to be excited about taking on risk. So if it wants to do that in the short term, I'm going to let it, but I want to make sure that my money is with the big money in the strongest direction that the market has to put it. And for me right now, in terms of how I understand the marketplace, that's going to be buying yen and buying US dollars. Does that make sense, AB? So I'm not trying to say that the pound is inherently weak. It certainly isn't. I'm just saying other conditions are likely to give strength to USD and JPY. Excel asks, why don't you buy and sell when the opportunity comes up for either way? In normal trading conditions, I love playing both directions, Excel. I have no problem doing that. No problem doing that. But these aren't normal conditions in my mind. I think we're seeing another swing of risk enter the marketplace, and so I want to be aware of that. Oh, Donnie says, can you define supply and demand zone? Because I see Sam seemed to depend on it in his trading, but maybe in a different way. So I need you to define it. Oh, yeah, it's really synonymous with support and resistance. What we're saying, or at least what I'm saying, I don't know how Sam means it, but what I'm saying is that these levels where we see definitive lines, you're not even looking at a chart yet. Here, hold on, let me show you. At these levels where the market shows excitement or pause, or both, right? These levels are where we have buyers and sellers. That's all I'm saying, is that we have supply, it reaches up on these areas. We have supply for sellers, right? And demand by sellers. We reach these areas down here. We have supply for buyers and demand by buyers, right? That's all I'm talking about. It's the significant levels in the marketplace that the market respects over and over again as a place where they make a decision to buy or sell a currency. That's it. Dollar Swiss, I don't know that we'll have a chance to get to a whole nother pair. Let's see, where's the news to make the cable strong? I don't know. I didn't look. In a short week like this, this week is mean easy to risk your capital. Any thought? Is mean easy. In a short week like this. Fuji, will you ask your question again? I'm sorry. I'm not getting it. Wixo asked, do you think we're in a consolidation period? If so, how long do you think it will last? Yeah, I think we are in a consolidation period, and I think that, there's a couple of things that the market's waiting for. I mean, for starters, everything's overextended, so it's time for a pause, if not a pullback. It's just time. The market has a very corrective nature, and when things go screaming definitively in one direction for too long, there's just a tendency for that to need a break. It has to sort of correct itself. Even if its overall sentiment is still directional, a lot of times big money will pull back price to make the trade side or the directional side affordable for their trading again, right? So I think it's just time for the market to pause. Also, I don't think anybody wants the USD this strong or the JPY this strong, right? Nobody really wants these conditions. The market wants to look for reasons to assume risk again. They like the carry trade. They want to be able to trade and change directions and strengthen economies and all of that, right? Sort of equal the playing field across the board. So that being the case, the market's going to need another really strong reason to keep that trend side going. Yet they're not thrilled about reversing it because it's not safe to reverse it right now either. So that just gives us lots of bumping along sideways, right? Just lots of shrugging of the shoulders and shaking of the head, and the market just isn't sure what's coming next. And when the market's not sure, I don't want to be sure, right? How long do I think it'll last? I think things will pick up again next week. I think we're going to see a lot of whipsawing behavior this week, and I think we'll kind of even some things out next week. I do. Fuji says it's easy to lose your money in a short week like this week. Yes. Yeah, it is. Protect that capital, right? If the conditions aren't lining up for your trades, don't force it. Okay, real quickly, because it was asked for, this will be the last pair we go through, and then I have a couple of things I'd like to say before we leave. So here we have, now I had to go all the way out to the weekly chart on this one, because within the context of what I was seeing on the daily chart, just a whole heck of a lot of bouncing around. So keep in mind, the chart we're looking at right now is a weekly chart. And in order to do any analysis, that I'm looking at, treat it fairly, I want to see the next zones that are likely to get hit should the pair break out either way. So I'm just going to pop a couple of lines on there. Actually, I'm going to tighten this up and grab more bodies with that line and cut a little bit of the difference. Oh yeah, ooh, I like that there. Okay. So now on our daily chart, we can see lots of indecision on the pair, right? If you're a channel trader, you're loving this, right? Right now, this is a really great pair for what you're trading if you like the channels. What we're seeing here is some support rejection. However, even on a daily chart, we got a significant close below the 60 mark, right? Now we do have a level up here that once it left it very enthusiastically and did not come back up and retest. So even within our larger context, we're already seeing here the two potential places it could go once it breaks out. The next support resistance zone down here at 57, and this retest area up here at 65. And the fact that this has really gone back and forth actually gives me a short-term bias to the long side. However, on that weekly chart, you can see how it's entered into this triple resistance hit here. So long term gives me a bearish bias. So I think this actually could come up and retrace. It's going to have a really hard time doing it in risky conditions right now, right? So keeping that in mind, as I move down to my 4-hour chart, I can see the secondary zone, right? I'm now nesting my boxes, nesting my areas of indecision. So if I get a similar triple hit on this resistance here, that's going to signal to me that the market's actually ready to go south before it retests this level. Right now, maybe the market just doesn't even care about this 64. Oh, see, now it needs to be down here. And this is another reason why I drilled down, right? So we can hone in and really define the levels that we like when we start looking at our trades. So the market may be telling us with the triple hit against this resistance area, if that happens, that it really doesn't care about this area. It doesn't really need to retest it before it sells off again. In a situation like this, the easiest way to trade this is to close outside this box on the 1 hour chart, trade it to the secondary low of the larger box. And look at that. It's going to be right near the psychological .50 number. And that's perfect. So a 59.60 is going to be a great profit target for something like that, for a trade like that. And I think that's going to look really good. I think it's going to work out really nicely. So that's really quickly the Kiwi yen. Before we go, I did want to just say, I know we just have a few minutes here. I know that when we start talking fundamentals and we have a lot of bad news in our headlines and we have a lot of reasons to become fearful, I know that it can be really difficult to not get wrapped up in the streaming headlines and the tickers that go across our news screens, and there's no filter for the news anymore. And really, a lot of times it's up to us to filter that. And I do mean from a trading standpoint, of course, pick the news that makes sense to you. You don't have to understand it all to trade well. There are many, many people that don't care about the news at all, and they don't even watch it. They just trade the technicals. But what I'm really talking more about right now is personally, because it can be really super easy for us to attach to the negativity and make it fearful, make ourselves fearful in our lives. And once we become fearful in our lives, we don't do ourselves any favors in terms of how we trade, how we live, how we work, how we operate. And I really do believe that, what we do for ourselves in our personal lives transfers out to the people around us and reflects back to us. So if we're transferring out fear and anger and frustration, we're going to continue to get back and reflect back to us more fear and anger and frustration. So I just want to encourage you to take the break when you need the break and treat yourself well and find the things in your life that you're truly, truly grateful for. I hope some of what you're grateful for is what you're learning in Forex. I hope you're able to be grateful that you have an internet connection and that you're here with me today and that you have a wonderful resource like FX Street. But of course, I hope that you're thankful for a lot more than that as well. I know it can be really difficult sometimes when we see what's going on in the world, and I always hold intent for healing, whether it's, the earthquakes, the hurricanes, the attack on the aid ship. There's just so many things. I always hold intent for those people's healing and healing of the earth and my students. However, I can do that without being fearful. I can do that without being afraid. I can look at the fundamentals in an economy and make a judgment on whether or not I want to trade that without investing into that. So I guess what I'm trying to say is I want you to be joyful. I want you to be happy. I want you to be grateful. And I think in doing so, you'll see that you find life and trading a whole heck of a lot easier. Learning how to trade is a very difficult thing, and it takes a very, very long time to do it. So much longer than people tell you when they promise you a system that's going to, make you $1 million overnight. It doesn't work like that. But it does have some really rare gifts in that it helps you develop yourself as a person if you're willing to let it. So please stick with it. I know it's frustrating times right now. I know it's hard to understand, all of the ins and outs and how it applies to you, and it seems like a whole heck of a lot of work, and it is. But I think there's a lot that you can get out of it too in terms of of understanding yourself. And then as you grow as a trader, understanding the world. You know, we live in a market economy now. We're all intertwined and interconnected, and nothing is going to show you that like Forex trading will. So I know I'm ending this on a lot more of a personal note than I usually do, but it felt important to me today in particular to say that. I don't know why, but I said it. So I want to thank you, as always, for being here with me today. I love that you come back. I love that I see so many regulars, and it just means the world to me that you're here. Thank you, Maud, for having me. Thank you, Adinda, for doing the recording today. And I hope you'll come back next Tuesday. I do these every Tuesday at noon Eastern Daylight Time. My blog is at www.triffsx.com. You're welcome to stop by anytime. Join if you like. It's free. And of course, as I was mentioning at the beginning of all of this, I'll be doing a backtesting webinar on how to use Forex Tester on June 21st at noon Eastern Daylight Time. And I hope if you get the chance and if you're able, you can join all of us at FX Street's International Traders Conference in Barcelona in October as well. It would be great to meet some of you. So thank you, everyone, for being here. I really, really do appreciate it. Please, I know I say it every week, please be good to yourselves. You deserve it, and you work hard, and I hope that you'll take that very, very seriously. It's not something I just sign off with lightly. I want you to be good to yourselves and be good to the people around you. Take good care, and I'll see you next week. Thanks, everyone. Bye-bye.